Welcome to Dr. Fred Markets. This is not financial advice. Most people will never understand how crypto, AI, and global finance are reshaping the world. The rules are changing, and the ones who adapt early come out ahead. You're here. You're paying attention. That already makes a difference. Let's go.
Energy drink stocks are just unlevered crypto with caffeine. You're trading sugar water like it's safe while crypto eats its future. Verdict: if you own Monster and hate Bitcoin, you don't understand what you're actually betting on. Signal 1. The energy drink business is a volatility machine dressed as a grocery item. Monster Beverage. Over the last 20 years, this soda with marketing turned a $10,000 stake into more than $3 million. That's Bitcoin-level compounding before Bitcoin existed. Yet people call it defensive consumer staples, like it's Campbell's soup. Margins? Gross margin over 50%, operating margin north of 25% for flavored caffeine in cans. That's software economics wearing a supermarket barcode. Red Bull? Private, so the real numbers stay locked, but every Formula One race is a 2-hour commercial telling you exactly what they're doing. They're not selling drinks, they're selling identity with 80% plus brand awareness and insane pricing power. The risk buried in that identity. It's one fad cycle away from being cringe, and your safe consumer stock suddenly trades like a mid-cap altcoin with diabetes. Signal 2. Energy drink demand tracks the same human impulse that drives crypto. Look at who slams these cans. Gamers, traders, coders, junior bankers, grinders on night shift. It's the same demo that opens a Binance account at 3 a.m. and buys Bitcoin at $81,000 because number go up. They don't buy refreshment. They buy performance, speed, and a small rebellion against HR-approved wellness emails. That's the exact psychology of crypto. Opt-out money, permissionless speed, no gatekeepers. Energy drinks are the liquid version of leverage. You're borrowing alertness from tomorrow. Crypto is financial leverage. You're borrowing returns from the future. This is the same dopamine circuit. Short-term focus now, hangover later. Every can is a candlestick. Signal 3. The market is quietly pricing this convergence, and you're pretending it's random. Crypto trades at full degenerate honesty. Bitcoin at $81,429, Ethereum at $2,049. No dividends, just pure belief that the future values speed, scarcity, and sovereignty more than comfort. Energy drink stocks trade on the same belief, just with better IR decks. They expect you to believe that the 18-year-olds chugging 300 milligrams of caffeine today will still be loyal at 35, still paying premium prices, still ignoring health crackdowns. Regulators are already circling sugar, caffeine, and teen marketing. One shift in rules, and your stable consumer growth name suddenly looks like an unhedged meme coin facing a rug pull from the FDA. Here's the cliff. The same crowd that built Monster's chart now lives on-chain, and their loyalty migrates faster than your portfolio rebalance. Here's the connection nobody spells out. Energy drink stocks are just early-stage crypto bets on human overstimulation.
Does what you just heard shift something for you? That feeling, that need to know more, is exactly the right reaction. Most people never get there. You just did. Let's keep going.
You're not investing in beverages. You're investing in the global willingness to trade long-term health for short-term edge. Crypto is the financial endgame of that same trade. We compress risk, speed, and leverage into code, then watch who survives. The market already told you this story once. Monster's chart is a proto-Bitcoin chart. Insane ascent, drawn-out sideways chop, every boom built on marginal new addicts, caffeine addicts in this case, willing to line up at the register and pay for velocity. But crypto doesn't need shelf space, fridges, trucks, or grocery chains. It just needs block space and phone screens. Energy drinks depend on physical distribution bottlenecks. Crypto just bootstraps a network. That's the asymmetry. Both monetize the same go faster now instinct, but one drags pallets through Walmart, the other rides code across the planet at the speed of light. So what does this mean for you? If you hold energy drink stocks and ignore crypto, you're double exposed to the same human weakness and underexposed to the cleaner upside. Here's the one thing you learned today. Energy drinks are the physical front end of the same risk hunger that crypto monetizes in pure digital form, and the digital side eventually wins on margin, scale, and regulatory escape velocity. Mechanism: 1. Demand driver. Both sell stimulation and speed, not utility. 2. Economic structure. Both enjoy crazy margins because addicts don't price shop. 3. Fragility. Energy drinks face regulation, health narratives, and brand decay. Crypto faces volatility and political fights, but zero logistics. So one action you can take: audit your safe consumption growth holdings. If you're long energy drink names because they feel stable, treat them like what they are: leveraged bets on overstimulated youth culture. Size them like you'd size a high beta crypto position, not like a bond proxy. Then, if you already accept that risk profile, consider shifting a defined slice of that caffeine risk into Bitcoin or Ethereum instead. The same psychology, but with cleaner scalability and no truck fleets. Not financial advice, but here's the truth. You already bet on human degeneracy when you buy caffeine in a can. Crypto is just the version that doesn't expire on a pallet. 3-point summary. 1. Energy drink stocks are stealth high beta, running on the same dopamine as crypto. 2. Both monetize the global appetite for speed and leverage, but crypto drops the physical baggage. 3. If you're comfortable owning the caffeine trade, you either size it like crypto or you admit you're lying to yourself. This is not financial advice, but it is the part your broker never says out loud. If you learned anything, hit subscribe, because tomorrow we poke another safe asset and watch it bleed. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about: a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.